Hi, this is Josue from Apex Insurance and Accounting Group. On the first video on formal business structure, we were talking about C corporation. On this video, we will talk about LLC. In general, what is an LLC? LLC stands for Limited Liability Company. It's a business structure in the US that combines the benefit of a corporation and a pass-through taxations to sole proprietorship. That's how the business does. Limited liability protections, the owner are automatically protected if something happens onto the business. Now, what we can try to do is looking at the advantage of this business to see if this type of business is the right type for you. On an LLC, you have personal liability protection. Okay, you have personal liability protections. Personal liability protections, before, if something happened onto your business, they sue you, you not automatically get sued. Okay, you have tax flexibility. By default, an LLC is a pass-through. When I say is a pass-through, if it is a single member LLC, that means the profit of the business go through the owner and reported on a Schedule C. If it's owned by two or more owners, the business is automatically taxed as a partnership. If it is owned by a C corporation, is automatically a C corporation. The other advantage of this business, it is easy to start. It's easy to start. Even though it is easy to start, but it's a little costly than the informal business structure. The other advantage you have again is you have less compliance, because if you want to compare an LLC to a corporation, especially a C corporations, you have less compliance. And also, the LLC give you privacy. LLC offer a couple of possible privacy advantages over a sole proprietorship. For one, some state don't require it. As you know, the video is not only for Florida. Some state require you have to pay a fee to be operated like a sole proprietorship. You have managing flexibility. The business can be managed by you, or you can elect member to manage your business. You have distribution flexibility on the LLC. Okay, all of those are advantage of the LLC. But if you want to see this business also, we cannot only cover the advantages, not cover the disadvantages. We have to cover the disadvantages. When you are a sole member LLC, you have some disadvantages because the business is owned by you. Okay, it's gonna be tough to not be automatically liable for the business, but there is some precautions you can take to prevent or to make it difficult for the judge to not make you automatically liable for this business. For instance, separate yourself from the business. Do not pay your bills, your business bill on your personal account. And also do not pay your personal bills from your business account. Having all of those separate them, make it a little difficult and for the judge to see your business was separate from yourself. Okay, and the other disadvantage you have on this business is state fee and tax fee, because some states require you to pay a fee to operate as a sole proprietorship. And the second one, disadvantage, I can say, the ownership is not transferable. The ownership is not transferable. And investor appeal. Big investor typically don't want to invest on an LLC. Okay, that's all of those disadvantage you will have on your business. And member must immediately recognize profit. That's not a disadvantage you have. When you have when you're having like a C corporation, the C corporation can hold the profit. But in an LLC, you need to automatically recognize your profit. This is like the LLC we cover, but in general, like, hey, if you just started, an LLC just for the limited liability protections could be the right type of business for your venture.